Hi everyone, Jennifer Blevins-Smith with Integral Clinic Solutions, and you're watching my YouTube channel, Navigating the Business of Medicine. Today we're going to talk about financial planning for private practices. Welcome back to my channel. Today we're going to talk about one of the often overlooked aspects of running a medical practice, financial budgeting and planning. As my title of my YouTube channel says, medicine is not just healthcare, it's also a business, right? You're a healthcare provider, but you're a business owner. And if you are taking this seriously, then you know that poor financial planning can lead to burnout, staffing issues, and closing of the doors. So today we're going to talk about how to build a budget that makes sense, how to stay on top of loan payments without sacrificing your growth, and how to survive deductible season without panicking. Oh, deductible season. We are over halfway through this year, which means deductible season is right around the corner, so this is an appropriate time to be talking about it. So let's go ahead and jump in about smart budgeting for small practices. Budgeting isn't just for large businesses, it's for all sizes of businesses and all types of businesses. So being a healthcare business, it's very appropriate to have a budget, and it needs to be structured. A lot of people have this misconception, not just in healthcare, but in business in general, that if it's a small business, they just kind of wing it and they kind of go off their cash flow. And that is not a responsible way of running any kind of business. Budgeting helps prevent expected shortfalls, things that you have no control over sometimes, or things that you didn't see coming. And it also will help with what I see very common in healthcare is overstaffing and underestimating expenses. If you've never ran a practice, if you've never had a business, these things are aspects that you think you might know, but you really don't. Even the smartest of people struggle in these areas, and not everyone is a business person. And I've seen where a lot of doctors who are brilliant and did well in medical school and are doing well for themselves as an employee try to open their own practice, and they think they know everything about running a business instead of reaching out to people like me who know how to run a practice, how to start up a practice, and they think they know how to do it all, and it does not work out the way they think, and they want to blame everybody else. Not everyone is good at everything, and not all doctors are good at being business owners. A lot of them are not, to be honest with you, in my experience. So relying on people that are and trusting them and having communication with them and learning from them is going to be your best bet. And by setting a budget, it allows owners to confidentially make decisions like hiring or expanding your services, or maybe even opening another location. You want to build a practice budget that works. So you could put a budget together, but if it doesn't work or it's not realistic, it's not going to be any good. So if for some reason you're already practicing and you're not a fresh practice or someone who's just starting a practice, use last year's data. If you've been operating, pull reports from your EHR, your billing software, and your accountant, and really take a look. Use your retrospective data. That is going to be your best friend, because that's going to help you forecast your revenue for next year. You're going to use your average monthly income, right? You have 12 months to look at. You can get an average monthly income, and then you can adjust for seasonal dips. Like we always know there's a dip in most practices in the summer because people are on vacation. The last thing they want to do is go to the doctor unless they have to. And you're also going to have that Q1, quarter one deductible slump. You're also going to want to take that data and you're going to want to break it up into different categories. This is very, very helpful. You're going to want to look at your fixed costs. These are costs that don't fluctuate month to month. So you have your rent, your insurance, your EMR subscriptions, your vendor costs, things like that. Then you're going to have your variable costs. These are things that you have to pay every month, but the the amount changes. So this is going to be your medical supplies, your hourly staff wages, your utility bills. Those are probably the three biggest things. If you have a lot of salaried employees, that's great, but not all your employees are probably salaried, so those hourly employees need to be factored in there. And then you have to consider separating your clinical costs from everything, right? So any providers that you pay, however you pay them, your medical supplies, and then you would have your administrative costs, which would be separate. So you would have your marketing, your billing services, and things like that. You want to make sure that you're looking at all of this in a very micro level, not a macro level, but a micro level to help you. And then you have to set realistic financial goals. This is where I find a lot of people have some kind of short-sightedness. Start with defining your short-term goals, right? Maybe reduce your no-shows by 20%. Or save $10,000 for a new ultrasound machine or x-ray machine. Make your goals defined. Don't just say, oh, I just have some of them here. You actually want to make sure that you have specific ones that are your goals, that there are measurable metrics. And then you need to have long-term goals, like maybe you want to hire a new provider by next year, or you want to open a second location, but being very specific and giving yourself some kind of time frame as well. And then you need to understand where your break-even point is, where you are not making any money, but you're not losing any money either. You're just right at that break-even point. So that means that your revenue that is required to cover all expenses are there. And this is going to be extremely important for startup practices. So if you are watching this because you're going to be starting a practice, when you're creating your pro forma and your budget and your financial planning, you need to find out where your break-even point is, where your revenue is going to be covering all your costs. You're not paying yourself, you're not making any money, but you're able to break even and cover all your fixed and variable costs. So Excel can be your best friend, honestly. And there are so many videos online on YouTube that can teach you how to use Excel for free. I encourage you to do this if you're not well versed in Excel. I personally am not very good in Excel. I know how to do the basics, but I wish I was a lot better, but it can be your best friend. And if you already have a Microsoft subscription, you have Excel. So take the time and learn Excel and use it to your advantage. Also, you have QuickBooks that can help you. Xero, X-E-R-O, and then they have Cario or Athena Health that will also help you as well. But honestly, if you're going to be doing this before you sign up for any vendors or third parties, softwares, things like that, when it comes to actually operating your practice, use Excel. Excel is just going to be the best option. And like I said, you already have it if you have a Microsoft subscription. You have to make sure that you start simple. If you try to do too much at once, you're going to get overwhelmed, you're going to get frustrated, you might even feel like defeated and you don't want to move forward. So start simple. That's why I said use Excel and assign someone, maybe it's your office manager or your bookkeeper, to check your expenses monthly. Or maybe not even monthly, maybe weekly. Like I had a bookkeeper that came in and met with me every week, and then she met with the doctors every week or every other week, depending on their availability. And then the doctors did stay on top of their cash flow into their bank account because a lot of things get automatically deposited. But then monthly, they did like a big meeting and they went over the previous month's expenditures and revenue and things like that. So I was in charge of like the day-to-day putting together invoices with packing slips and meeting with the bookkeeper who kept track of the ins and outs of every day and every week. And she would touch point with the practice owners on a regular basis, but they had their big like monthly budget and financial planning meeting for the previous month in the middle of the next month. So make sure you have something like that set up and you have multiple people involved. And my next point that I wrote down that I already talked about is schedule monthly review meetings, even if it's just you. Like if you're just the only person involved in all of this, you have to schedule it so it happens, because life happens, patients happen, but you cannot neglect the finances of your business because it's a business. And if you do, you're going to end up really, really not happy with what happens. So now we're going to talk about your loan repayments, because this is a big thing, right? Especially if you are a startup practice and you have to get loans. You're going to have startup loans, right? If you have been operating, but you still have loans, maybe for equipment, and you're still paying off your startup loan, you need to know exactly what you owe. You can't just go, oh, I don't know, it's somewhere here or there. No. You need to know what you owe. So you have to collect a list of all your debts, because in order to pay back your loans, you need to know how much total debt you have a month and how much revenue you have coming in, and then maybe you can look at that and make a plan of action. So you need to know all your practice startup loans. You need to know your equipment financing for like your EKG machines, your x-ray system, things like that, and any credit cards or lines of credit in which you are still paying back as well. You have to note the interest rates, very, very important, your minimum monthly payment on all of them, and how long your term is. Another thing to know is if there's any penalties if you are to pay it off sooner. A lot of times there aren't, but there still are some out there that if you try to pay off something earlier than the time it expires, then you are penalized financially. And then once you have all that information, you can come up with payment strategies. So there's some different ways you can do this. There's the avalanche method, which is you pay off the highest interest loans first, because that's going to save the most money in the long run, right? Because you're paying off the high interest, you're not paying that additional money that you shouldn't because of that interest money, and it will be taken care of. The other adoption is called the snowball method, where you pay off the smaller loans first because psychologically you're feeling good about paying those off and it's a win. So depending on your approach, you would pick one of these. Then you would need to maybe consider refinancing. So if you've improved your credit or your revenue has increased, you may qualify for lower rates or long-term rates, like longer-term rates. So for an example, you might refinance a 10% interest loan to 6%, and that would help you save thousands of dollars over 5 years, even 2 years. That's a significant 4% difference depending on the amount of your loan. That could be significant. And then you want to make sure that you're balancing your repayment with your growth. So don't overextend yourself trying to be debt-free. It will come. You just have to have a strategy and stick to it. If you're considering a big investment, like a big piece of equipment, a large EHR system, new staff, weigh out the return on investment with that, okay? And ask, will this investment increase revenue or reduce costs? Those are your biggest questions. Will it increase revenue or reduce costs? Those are the things that you really need to consider. So you want to make sure that you're preparing for deductible season when you're taking all of this into consideration. Most people's deductibles reset January 1st of every year, and that means that patients will have to pay you before the insurance will pay anything. So you're at the mercy of patients paying their bills to you. I have multiple videos about this. This leads to fewer visits oftentimes because people know they have the deductible, and lower revenue, at least in Q1 of the year. Sometimes it does trickle into Q2, depending on your specialty, your location, your patient volume, things like that. And practices usually see an influx or an increase of patient volume and visits in that last quarter of the year, October through December, because people have usually hit their deductible. So they're trying to take as much advantage of it as possible, and they want to utilize their benefits. So if that's the case and you see that happening and trend in your practice, maybe open an additional hour a few days a week in the last quarter of the year. Try to stack up and earn as much money as you can during that time to carry over into your Q1 and a half of the following year. So what are some strategies to minimize the impact of the deductible season? One, remind patients in Q4 to book their visits before their deductible reset. So maybe even in Q3, like right now, since we're in July, start educating your patients or reminding them and saying, hey, if there's anything that you want done or you want to be seen before your deductible starts over, schedule it now so that you're not missing out on appointments because we fill up fast. And then offer easy to understand explanations of their insurance coverage. A lot of patients don't understand their insurance coverage and they're gonna go, I don't know what that means, deductible. I don't know what you're talking about. So you need to explain it to them because it is our responsibility to help them with this because it directly affects our revenue. Offer payment plans to patients. I talk about that very often when patients do have a high deductible or a deductible that's unmet. If you want to get paid, offer payment plans, and then they know that you're being flexible, they appreciate it, and you will be getting some money in the door regularly. And help with collections and patient retention when it comes to payment plans and your staff and giving them ideas on how to collect from these patients. We've talked about making sure you're verifying patient benefits up front, maybe doing a pre-collect of a certain deposit amount if they have an unmet deductible so that you have some revenue. That's an idea, but of course you would have to make sure that's okay with your payer contracts that you have as well as your guidelines and billing legalities in your area when it comes to all of that. I have different videos about this, so if you're considering pre-collecting on patient deductibles and things like that, check out those videos. But just make sure that you are only going to be as strong from patient collections as your process internally and your staff knowledge and a set way of approaching patients when they have high deductibles, unmet deductibles, they have bills that they haven't paid yet, etc. And then you want to make sure that you're doing some operational adjustments, kind of like I mentioned earlier. So you want to make sure that you build reserves from Q4 if you have a high volume of people trying to be seen before the end of the year, that you're using that money and you're building it to help you cover over the slower times of the following year. And you also want to delay large purchases if at all possible until things are a little bit more solid for you. And reduce unnecessary overtime from your hourly employees and shift coverage if your patient volume is low. I know that in the summers, we knew when the patient volume was going to be low and we asked people if they wanted to take vacation during that time. Or we would be very honest that we would send we would send staff home if the patient's volume is low. Patients would not need the staff there and we don't want to pay the staff, so we would send staff home early. Most people didn't have a problem with it. They liked that, but some people really need that 40 hours a week, and that was an issue for some people. But we were very honest up front when we hired people that this is a reality of working in our small practice, and we kind of went from there, okay? You want to make sure you're controlling those expenses. It's really, really important, and you have to be cognizant of it. And then you want to make sure that you're tracking claims closely, that you want to make sure that you're increasing your focus on billing and collections. I talk about that in a lot of my videos as well. And the denials in the first two quarters of the year are definitely going to hurt you more than in the other parts of the year because it delays you from being able to get those statements out to those patients that have those patient cost shares and you're not getting payment from the insurance. So you want to make sure that your staff is following up even faster on denials and rejections, especially in the first half of the year, to make sure that you're trying to get those adjudicated as fast as possible so the statements go out to patients and they can hopefully pay you. So as you can see, budgeting really helps you predict and plan in your practice. And if you're doing this correctly, your loan repayments are going to be manageable and you'll have a clear strategy on how to obtain your goals. And even though deductible season is tough, if you prepare, you can stay ahead. And I say that in a lot of my videos as well. This is just a reiteration of that. So for an action plan, I suggest scheduling a 1-hour financial review in your practice, even starting next week if you want to get ahead of this and you're not doing it already. Gather reports for the last 12 months on revenues and expenses and outstanding debts. And block off a standing budgeting meeting every quarter, even if it's just with yourself, so that you can make sure it gets done and it gets done appropriately. If you have any questions or comments about this, I would love to assist you, so please leave that in the comments below. Smash the thumbs up button if today's video was helpful. Subscribe to my channel if you have not already, and please share this with your colleagues whom you feel would benefit from the information. I appreciate your support, and we'll see you next time. Bye-bye.